Hey guys, welcome back to another edition of the Market Preview. My name is Vasily, I'm your trading coach and professional Forex trader. For today's weekly edition, I finally prepared for you trading. You know, the last two videos were very educational, they were kind of abstract, and now we return back to the battlefield. Now back to trading, to trade execution, technical analysis, and based on a very interesting example, I will show you how do we actually predict the future with technical analysis. So we will apply just the price action, structure, and some intuition, and it will help us to make predictions for the next week. So enjoy that. Don't forget to like this video, subscribe to my YouTube channel, and leave a lovely comment. It motivates to record more educational and trading videos for you. So I want to discuss with you the pound Swiss pair, and I always read your comments. I always read the questions that you post in the comment section, and I see that many of you want to learn price action. So here on the pound Swiss, we will apply just the price action. The entire analysis will be based strictly on the price action. So realize that if you want to master price action, you should know all the things that I'm talking about right here. You should learn all that. Yes, it is all about price action. So pay attention, it will be very important. So when we trade the currency pair or any other market, we start our analysis with the daily. Yes, we start strictly our analysis from a daily time frame. And on a daily chart, our tasks are to identify the market trend and to identify the key levels, the points from where the price has started to fall or to grow in the past, right? So first, let's start with the trend. Yes, and I always ask my students a very simple question. Are we bullish or bearish? So what's happening on the pound Swiss right now? Are we bullish or bearish right here? Just pause this video and think and ask, what do we see right here? In my view, pound Swiss here is bearish. Yes. And how do we know that? Here we need rules. We need strict rules to follow to identify a market trend. So to identify a market trend, we need to identify the impulses, the most important, the most significant legs of a move that we saw during this year. So let's analyze. Here was a very strong bullish impulse, then the price dropped. Then we had a bullish impulse to the upside again, then we dropped again. Yes, then bullish movement to the upside, downside, and now it looks like here we probably started a bullish movement, we don't know. So, based on that, what do we see? Based on that, we see right here, structure low, yes, lower low, lower low, yes, structure high, higher high, lower high. So, according to my rules, the market here is bearish. Why it is bearish? Because we have here 3 lower lows and 1 lower high. And then according to my rules, I consider the market to be bearish as soon as we have a bearish impulse, lower high, and new lower low. Yes, as soon as I see this condition, as soon as this condition is met, I consider the market to be bearish. So here, pound Swiss is bearish. And we assume that no matter what happens on a lower time frame, no matter where the market is, at some moment it should start falling and it should go to a new structure low. Yes, so we are kind of bearish biased right here. So now, as soon as we identify the current market trend, we need to identify key levels. A key levels are points from where this bearish movement, this bearish continuation can start. So now let's discuss the key levels. So for identification of key levels, we will rely on price action again. But if with trend analysis we identified only the major impulse legs, for the key levels we need to work with the price action in details. We should pay attention even to the minor legs, and we need to identify the points from where the market started to grow in the past or started to fall in the past. And by identifying such points, we assume that in future we will see the same reaction from the market again. So what do we do right here? We start analyzing even the minor legs. Yes, we start seeing the chart kind of like that. Yes, we start following a very minor price movements. Yes, and we follow the chart like that. So we consider also the minor price fluctuations. Yes, and this is in my view very important. So our chart right now looks like that. Yes, it looks like a complete mess, but what is important right here are again the higher highs or low highs. Yes, these points. Look at that point, that point right here, that point. Why these points are important? Because they match. Yes, realize that they are lying very close to each other. And if we draw the horizontal line right here, look what happens over here. Look, we have here a key level. We have here a major key level. And look right here. Look at that level over here. Look how strong bearish and bullish movements we had from that level. Look at that level. Again, just a huge level. Yes, so we just by following the price, yes, just by easily following the price, we identified the major levels, the most important levels for pound Swiss. Yes. And now we have two things. First of all, we have our key levels and we have our directional bias. Yes, our bearish bias. And what do you see right now? You see that right now pound Swiss is trading on this key level. Yes, and according to our predictions, the market is bearish and with very high probability it should start falling. Yes, and it should start falling to the next key level, to this structure support. Yes, so this is how we make predictions on a daily. Yes, we make prediction on a daily that the market is bearish and it will start falling to this structure support. Now what do? Now we analyze a lower time frame, and on a lower time frame we look for the things that confirm our predictions, and there we will rely on the price action again. Guys, and just a brief interruption, many of you asked me how my educational group looks like, and as you know, I have a premium educational channel for my students where I teach my approach. And you know, many of you want to see how it looks like, what it is exactly. And for that, I finally created a website. It is the vasilytrader.com, and the link will be in the description below, and also it will appear somewhere here. Yeah, so please check it out. All the information will be there. I think there you will get all the details about my educational program. So please check that. Yes, so now let's continue. So after the daily time frame analysis, the next time frame that we should pay attention to is the 4-hour chart. Yes, the 4-hour chart is the second time frame that we analyze based on our top-down approach, right? So now let's remove our key levels. Now let's remove everything and just let's check what's happening right here. So indeed, as you remember, here somewhere we have our daily key level, and clearly you can see that the market for now can't go above that. Yes, clearly the market it tries to go higher, it tries to violate that level, but for now it can't, right? And again, here I want to analyze here with you the price action, because price action here is very important. Look, here is our last strong bullish impulse, and after that the price started to coil. Yes, the price started to coil. The price was coiling and coiling and coiling right here, and yes, for you it might look like a complete mess, like a complete chaos, right? But if we pay attention to details again, here what you will see, here you will see that first of all here we have a strong horizontal structure support. Yes, and each time when the market drops to that, each time we see a strong bullish reaction from that, each time the market bounces from that. Yes, and at the same time, look, here is our higher close, but here is our lower high. So you can see that the bullish movements from this structure support, from this horizontal structure support, become weaker and weaker and weaker, yes. And it looks like that bulls clearly lose confidence in this structure support, yes, and less buyers are buying from this support. And here we have a perfect example of a classic price action pattern, the descending triangle, yes. And most of the time it is a bearish pattern, and it signifies a highly probable bearish continuation, yes. The problem with that pattern is that we don't know how long the market will trade within this triangle. It can trade right there for a very long period of time, yes, and it can keep bouncing and bouncing and bouncing like that. And what we wait right here, we wait for the breakout of that to the downside. It's the signal for a bearish continuation, yes. But here, let me show you one more thing that you may miss. If we return back to the price action of September, and if we analyze these points, yes, these points right here, let me show you one more thing that we have right here. Here we have a rising channel, yes, a very important rising parallel channel. You can see that right now, yes, clearly. We have it here. It confirmed by 3 touches, its resistance confirmed by 3 touches, and its support confirmed by more than 3 touches. So the trend lines of this channel are very important. And look what happened recently. Look what happened. The market here has violated this channel to the downside. Yes, so now let's just remove everything. Let's just bring back our channel right here. Look, we had a clear violation of that channel to the downside. The market broke below that. It is a very strong bearish clue, yes, and even though we are still respecting that horizontal structure, that rising trend line doesn't hold anymore. It is a very strong bearish signal for us, and definitely for us right now it is enough to look for short trades, yes. We see that the market is weakening. We see this descending triangle formation. We see a lot of bearish clues. And now let's look for the short trades. And hourly time frame will help us with that. So now we will switch to the hourly time frame. And by the way, why hourly time frame? I know that many of you are wondering, why do I use the daily 4-hour, 1-hour combo? Why don't I use, for example, the 4-hour 30 minutes, 4-hour 15 minutes? You know, it is a very subjective thing, and you know, you should do your own back testing and find out the time frames that you want to trade. I just found out that this daily 4-hour, 1-hour combo is just the most efficient for me, you know, for my psychology, for my psyche. But you can try different variations, you can try different combinations, yes. So now let's switch to the hourly time frame. And on the hourly time frame, why I need hourly? On hourly, I actually enter my trades, yes. I do predictions on a daily, I look for the confirmation on a 4-hour, I look for the confirmation hourly, and I trade my predictions on hourly, yes, because it gives us the safest and the smallest stop, yes, and the highest possible reward. So what do we see on hourly time frame? Yes, again, the price action. We will strictly apply with you the price action. So look, here we retested the broken channel. We dropped to the downside to the support of the descending triangle that we identified, and now we retested that again. And look what happened right here. We bounced all the way up, we retraced, then bulls tried to go up again, but here we formed the lower high. Yes, we formed the lower high, and we violated and closed below this minor structure support to the downside. Yes, we have a clear violation. So here we have with you classic example of a double top formation with a lower high. It is my favorite reversal pattern. It is the most accurate reversal pattern, and definitely we should try to trade that. So how do we trade this pattern? We trade that simply opening our sell limit order on the retest of the neckline. Yes, so once the market is opening, I want you to open the sell limit order based on the retest of the neckline, yes. And here we will expect a bearish continuation, yes. Our stop will be above the lower high somewhere here. And very tricky what we do right here. So here is the support of our descending triangle that we identified on 4 hour. And here is the level. Once the market reaches that level, we will just simply set our stop to entry, right? Yes, so we will make our position risk-free. But as you remember, our predictions are that the market, because the market violated the channel on 4 hours, because the market is bearish on the daily, we expect a strong bearish movement. So where will be our target? Where we will aim at? We will aim at the next structure level. Our next closest structure level is the level, let me show you, is the level right here. Yes. Do you see that level? Over here, all the way down right here. Let's adjust it a little bit like that. 171. Let's adjust it to the round numbers. Yes, this will be our first goal for our trade based on the 4 hour structure. And our end goal will be the structure that we identified on a daily. Yes, this structure over here will be our second target. Yes, so you can see that risk to reward that we can get from that trade is just enormous. Let me just show you. We have 3.68 risk to reward for the first target, and for the second target, oh man, I don't even know how many we will get right here. Yeah, it is like 6. It is just huge, right? So here you can see that we have many different things telling us, many patterns, many clues telling us the same thing. And here we will just try to trade our predictions. Yes, so again, this structure support right here is the level where we will set our stop to break even for protection. Yes, our stop to entry. Then this is our first target, and we will take our half of our profits based on that level. And based on the second target, we will take the rest. Yes, and here the profit potential is just enormous. I don't know how much time the market will need to reach our targets, but you know, I have very high expectations for that trade, and I truly want you to be involved in that. If you trade demo account, try that on demo. Yes, just try it. You see, I'm trying to suggest you the trading setups only that I trade by myself, and where I am very confident. Yes, I show that because I'm very confident in this trading setups, and even if they lose, I know that you learn a lot by trading these trading setups. Yes, so this is your plan for the pound Swiss. Please pay attention to that. Yes, just try it, try this approach, and let me tell you something. Alright guys, so I think on Monday we will see how our prediction will play out here, and you know, I have very high expectations for such kind of trading setups. Most of the time they show very high win rate, and the point here is that we analyzed multiple time frames, and all the time frames tell us the same thing. You know, it is a very rare thing, but once it happens, you know, most of the time we make cash on such kind of trading setups. So I hope that you enjoyed this video. Please try to test such kind of trades by your own. Try to apply this technique, try to apply this method, and you will be surprised how efficient and accurate it is. Yes, so thank you for watching. Please like this video, subscribe to my YouTube channel, and leave a lovely comment, and please propose new videos for next week. Thank you guys, and good luck.